Hello and welcome to the Weekend Investing Daily Bite, 7th of June, Friday. And I think today is that one day where you can really say that the impact of the election result is now history and that the market has continued the path it was on prior to the elections. So I think that entire event of elections is behind us. I say that because in case there was any nervousness of any kind, you would have seen the markets not climb back to previous highs, make new high closes. You would not have seen PSU, PSE banks, which were dependent upon strong government, to have rallied back. Uh, Minus the only one thing where FIs continue to sell, but they have been selling, since a while, and domestic players have been more or less, in fact, more than what FIs are selling, domestic institutions are buying because the flow of money from domestic investors is so large. I think last month the SIPs had crossed 20,000 crores per month, which used to be, I mean, if you just go 4 years back, it used to be, I think, 6 or 7,000 crores. So almost tripling of the flow of money into the markets. Of course, at some point of time, this may have a break, but as of now, and usually what you will see is that SIPs that are getting built don't easily break down. I mean, you really need a shocker of a market to really break down. And what we saw in 2021, 22, when markets after the run went into a lull for almost a year, the ships didn't break. Uh, there have been fantastic buying on the day of the dip. I mean, that tells me that there is a lot of money on the sidelines. In fact, we at Weekend Investing also saw our highest number of new subscribers come in on the dip day. So people are very, very smart today and they are buying the dips. They are optimistic for the future. And this is how the weekly candle looks like. I mean, I have never seen a candle like this, I think, in my entire career, where the weekly candle actually came below about 3 months of range and then closed above it, all within 5 days of action. And this is just unprecedented, I would say. Shorts are trapped. Maybe some shorts have gotten out. I don't have the exact data as of today, but a lot of money was sitting outside. A lot of overseas institutions who don't have a foothold in India were looking to get in after the elections. The ones that have been in India may have been selling net, but there is a churn that is happening in those portfolios also. Overall, a very, very good, I think, event for the markets, very, very good week for the market. I think it just goes on to say the current strength of the market is just awesome. Unless we break this 21,200 or abouts, whereabouts region now, there is no problem in the market. And we are handsomely 2,000 points above that range also. Yes, we will get overbought at some point of time. There may be some corrections, but the entire trajectory of the market could have changed if there were 30, 40 seats further going away from the ruling parties. I mean, that we came very close to disaster actually. And not having had to go through that disaster, I think, is a very lucky break for all existing investors. Otherwise, we may have had to spend, I don't know, 12 months before another election would have happened, because that motley group would never be able to, pull it along. Anyhow, so coming back, great news for the market this week. Nifty very, very strong, yet to break on intraday basis on a new high, but the closing is extremely strong. 22,800 is where the current support would land if there was a retest of the bounce. Uh, Nifty itself gaining more than 2% today. Other benchmarks, Nifty Next 50 gaining 1.4%. So we are now very close to prior to election highs. So great going there. Mid caps closing at near all-time highs, again up 1.4%. There's a good churn that is happening within different sectors. I'll show you that. And small caps is the biggest, I think, positive news for me today, up 2.25%. But more than the percentage, they have broken above this long resistance that has been held since April. Let's hope that this holds and we build further on it. This now will become a good support point, 15,800 to 16,000 on small caps, and that is very good news for small caps in general. Bank Nifty is also building up gradually, not yet near the all-time highs, but very near 50,000, which can be a psychological. So round numbers, large round numbers are always psychological resistances, and it takes time to take them out sometimes. FIIs, as I mentioned, continued to sell. So yesterday also 6,868 crores sold by FIIs. DIIs bought 3,700, yet the market is up. Previous to that day, FIIs sold nearly 5,000 crores, yet the market was up. So the market moves are not in sync with FII sales. So if FIIs are selling, does not mean that markets may be down. That correlation seems to have been broken. But yes, if they continue to sell nearly 6,000-7,000 crores of 0.8 billion dollars a day, at some point they can get broken. But the percentage of FII holding in India, I'll show you that in coming sessions sometime, is also coming down very rapidly, and soon some point may come where some FIIs may decide to up their stake now, and that may again start a buying phase of the FII segment. Today's heat map all very, very green. Reliance up 2.5%. IT stocks were very, very resilient. Nasdaq is hitting new highs. Infosys, TCS, Wipro all doing quite well. Uh, Autos, Tata Motors, Mahindra especially, both these stocks really doing well. Steel and cement doing well. Infrastructure doing well. Power doing well. Communications, Bharti Airtel also doing well. Banks not as fast as others, but still in the green territory. FMCG was a bit muted today, and expectedly so. If risk on sectors are moving, FMCG may not move. Within the next Nifty Next 50, also primarily green. You had power stocks go up, you had public sector enterprise stocks go up, commodities are up, FMCG is up, you had real estate continuing to build up, uh, power finance companies also up, and retail trade also up. There's no red on the screen here. So all the sectors are in the green today. Even FMCG has moved up 1%. Incidentally, for the last 1 week, FMCG is now the second best performing sector. IT stocks for a change, and a remarkable change at that, are up 8.6% this week. So you can see that the sector is somewhat rotating. IT and autos have taken a lead, 8.6%, 6.8% for the week gone by, along with FMCG. Consumption stocks are also up 6.2%. All sectors up 2% or more. Consumption, pharma, PSU banks, private banks up a little less than 2%. Overall, if you see this entire chart, we are largely green, and that is always a good sign. IT index, as I mentioned, has broken out. So this is extremely good move, and you can see the sharpness of the move. We had come close to 31,000, and today's close is nearly 35,000, more than 15-16% gain just in 3.5 sessions. So remarkable move on the IT stocks, up 3.3%. Auto index is just going bonkers. It is going to a new high. 5,000 crossed on CNX Auto, 2.56% up, and many stocks have moved up within the auto space. Some stocks that are showing, relatively weakness versus the market is JBM Auto. The stock actually dropped 5.5-6% today, despite a lot of its compatriots actually going up. So always look for strength in a weak market and weakness in a strong market to identify which are the strong and weak stocks. I'm not sure if there was any specific news on this, but if there wasn't, then for this stock to drop while the market was on fire, signals that there is some issue here, and there may be some news that may come out soon enough. You can see that this stock JBM has been diverging since February 2024, and we are down 15% on this stock while auto stocks have run up 22%. So this is also a great way to look at what stocks are slowing down. Maybe because JBMA had run up a lot in the previous 2 years, and we also had it in several of our portfolios. Possibly some portfolios still have it. JP Associate is another example. You can see JP Associates is hitting down circuits. Of course, their political affiliation may have also caused this kind of a move on the stock. But since February, JP Associates, after making a huge run from a few rupees to till 27 rupees, has been dropping while the market has been going up largely. This again showcases that the distribution is done and the stock is getting distributed to retail investors. This is flat. The stock, which of course went to 300 400 rupees, then dropped to 1 rupee, and you can see that it from 1 rupee it rose to about 27 and is now dropping very very fast to 10.9 rupees. India VIX index has come down to 17 levels and is stabilizing here, so we are very close to where we used to be prior to what the election results have started. Gold has seen a smash down today, 1.7% down, so from 73,600 roughly to 7,200, back into this zone that we were at. But on the very short term basis, on a hourly basis, gold is extremely oversold right now. There has been some sell off on the US dollar gold market, and hence the result in the Indian market alongside. This is all I have for today's Daily Bite. Thank you for watching. Please like and share these stories if you like them, and share them with your friends and family, and do also subscribe to the channel. Thanks. Bye.